You ever look at the stock market and just think, what is going on? One day it's all doom and gloom, the next it's total euphoria, and the reason for the switch seems, well, kind of flimsy. Today, we're going to dive into one of those moments, a totally baffling market rally that, when you first look at it, makes absolutely zero sense. And that really gets to the big question we're tackling. Because you see, this wasn't the first time something like this happened. So, are some of the smartest people in finance really getting duped over and over? Or is there something else going on here? Okay, so let's get right into it. To really understand what's happening, we need to rewind and look at the specific event that sent traders into a buying frenzy and left the rest of us just scratching our heads. And this all happened so fast. Picture this. Over the weekend, the mood was seriously tense. President Trump lays out this major ultimatum for Iran. The markets are basically bracing for impact. But then, Monday morning, just a couple hours before the opening bell, the whole script flips. Trump says he's postponing the deadline, talking about productive conversations, and when the market finally opened, it was liftoff. And I mean a serious liftoff. We're talking about the Dow Jones jumping more than 1,000 points, like right out of the gate. It was a huge, immediate turnaround from the pessimism of the week before. And this wasn't just some flash in the pan. The gains actually stuck around. By the time the market closed, the Dow, the S&P 500, the Nasdaq, they were all way up. That anxiety from just a few hours earlier, totally gone, replaced by widespread euphoria. Okay, so this is where things get a little weird. For anyone who follows the news, this whole sequence of a tough threat followed by a sudden walkback, it probably feels pretty familiar, right? Well, it turns out Wall Street traders have seen this movie so many times, they actually have a name for it.
Yeah, they call it the taco trade. It's an acronym for Trump always chickens out. It's a whole strategy built around this exact pattern. Make a big, dramatic threat, and then soften the stance. So here's the puzzle. If the traders know about this pattern, why do they react with what seemed like genuine relief and excitement? It just doesn't add up.
And this, right here, brings us to the most important point. To solve this mystery, we have to stop asking whether the president's claims about productive conversations were actually true or not. Because it's very possible the market is playing a completely different game. This quote from Daniel Alpert over at Westwood Capital just nails it. Markets don't trade on truth, they trade on beauty. Okay, what on earth does that mean? Well, it all goes back to a classic economic theory that tells you a whole lot about how we humans behave. And this brings us to this brilliant analogy called the Keynesian beauty pageant. And I promise you, once you get this, you will never look at the stock market the same way again. So the concept comes from the famous economist John Maynard Keynes. Imagine a newspaper runs a contest. It shows you 100 different faces, and your job is to pick the 6 that you think everyone else will vote for as the most popular. Now, to win, you don't pick the faces that you think are the most beautiful. Nope, you have to guess which faces the crowd is going to find beautiful. The whole game is about predicting what everyone else is going to do. And that perfectly explains the two different mindsets here. On one hand, you have traditional investing. That's all about the fundamentals, the economic reality, what's true about a company's value. But short-term trading, especially in a moment like this, is a full-on beauty pageant. The traders aren't asking, is this good news actually real? They're asking, will everyone else think this is good news and start buying? And if they think the answer is yes, then bam, they pile in, ride the wave, and get out. But the beauty pageant theory isn't the entire story. When you have thousands of people all trying to guess what thousands of other people are thinking, other really powerful psychological forces start to take over. First up, you've got good old-fashioned FOMO, the fear of missing out. As one strategist put it, nobody wants to miss a rally. Simple as that. When stuff starts going up, that instinct to just jump on board can be overwhelming, and this can lead to these huge overreactions to even the tiniest bit of good news. Plus, in this case, stock traders were also taking cues from oil traders. The oil folks have a much clearer view of what's happening in the Persian Gulf, so when they saw oil prices drop sharply, for stock traders that was basically a giant green light to hit the buy button.
So what do you get when you put all of that together? Well, you get a market that's not really trading on cold, hard facts. It's trading on something much more fluid, much more human. You could even say it's trading on vibes.
That baffling rally wasn't really about traders believing a story they'd heard a million times before. It was about each trader believing that every other trader would react positively to the news. And that creates a self-fulfilling prophecy. It's a high-stakes game of predicting the crowd's reaction, not analyzing reality.
Which, of course, leaves us with one last kind of mind-bending question. If the market is just one giant beauty contest where everyone is trying to guess the winner, who or what is actually judging the contest